Hi, this is PR Sundar. Welcome to Dalal Street Week Ahead program sponsored by Delta.Exchange. First, let us look at what happened last week. And the previous few weeks, markets non-stop rally because of the Fed announcement. And last week came the much awaited correction. But bull market corrections are always fast and ferocious. Just in one single day, Nifty fell more than 500 points from intraday high to low. That too after gap up of more than 100, 150 points. So that is a ferocious fall. But then the following day, markets recovered, and the next day also markets recovered. So finally, Nifty is down by maybe like less than 1% for last week. But broader markets, a mid cap and small cap, probably might have fallen more than that. So last week, it's a good correction. And, we cannot say correction, but we can say it's a consolidation. And FIIs reportedly sold more than 2,500 crore yesterday, that is on Friday. Probably that is the last day, the big FIIs can sell. And as I told you, Monday is a Christmas to New Year. Mostly the big FIAs will not be very, very active. Most of the fund managers will be going for holiday. So because of that, there will be less volume. But less volume sometimes can make markets more volatile. And less volume means what? If somebody is selling maybe for a small quantity also, there will be no corresponding buyers. The markets may fall suddenly. Same thing, if somebody is buying for small quantity, there will be no corresponding sellers. So volume has to be really very good. Less volume may lead to higher volatility. So that is what is expected for the next 3 trading sessions. So we have only 3 more trading sessions for this December expiry. And as expected, markets were trading between 21,000 and 21,500. So on a closing basis, Nifty did not close above 21,500 and it did not close below 21,000 in the last 5 trading sessions. And that trend is likely to continue. The open interest also indicates almost the same. There was a highest open interest at 20,000, 22,000, but that we have to ignore because 22,000 call option is being bought by the people who are selling nearer call options for the purpose of reducing the margin money. So if you leave that 22,000, the next highest open interest is at 21,500. So that indicates, 21,500, 21,600 will be likely resistance. And these people know because the recent high is close to 21,600. So the 21,500 call will be trading around 70, 75 rupees, and they would be selling some put option also. Even if they sell 21,000 put option, which was trading around 30 rupees, so they collect about 100 point premium, so that their upper break even will be only 21,600. And since we have only 3 trading sessions, and usually the last week is likely to be lackluster, so these people are banking on some time value. Right? Looking at the downside, the 21,300 put option has huge open interest. So otherwise, 21,300, 21,200 put options have more open interest, and call side to 21,500 and 21,600. So you can say broadly 21,200 to 21,600 is the range for next 3 trading sessions. Stock specific, there are many news. Number one, though Nifty closed positive, the Bank Nifty closed at the lowest point of the day on Friday. So we need to see how banking stocks going to move. That's one. Second thing, Infosys seems to have lost 1.5 billion worth of contract for artificial intelligence. So that news came only yesterday. So therefore, Infosys may come under some pressure. And, on Friday, though Bank Nifty fell, it was the IT index that took the markets higher. But on Tuesday, something opposite may happen. So the banks may recover, but IT stocks may come under some selling pressure, particularly Infosys. And markets are at peak, or we can say nearby peak. Nobody know where is the peak, but that's what at least people the recently in the December month alone, and Nifty has shot up more than 10%. There are few potential risk factors, like these COVID cases are rising, the Middle East Red Sea crisis is brewing, and few other things. But I would say in a bull market, the negative factors will be ignored. In a bear market, positive factors will be ignored. So these negative factors will be most likely ignored by the markets because the undercurrent is very, very, very bullish. Until 20,900 is broken, so this market is technically long. So every buy and dip strategy will work. And at the same time, you must remember, don't chase the market. So bull markets, in fact, I tell you, more selling will happen in a bull market than the bear market. Bear market, if some bad news comes, markets will fall suddenly. Then after that, it will just continue to stabilize without moving much. But bull market, will be more volatile. And I have personally seen many people trading between 2003 to 2008. Most of the traders have not made money, but investors made good money. So in a bull market, in fact, traders make better profit in bear market than the bull market, but investors make better profit in bull market than bear market. So be prepared for the kind of volatility. So that's the thing. So economic data wise, there is nothing, so the fresh we will start in the month of January. So markets, consolidating for a few more days is actually good for option writers. And so other than that, so there is nothing very important. So we need to see how the global cues, particularly the crude oil prices. And although there is the Red Sea issue is one issue which is on the downside, another side, Angola left the OPEC association. So therefore, the crude oil actually fell on Friday. And more significantly, in US markets, the volatility index kept on rising. And yesterday until 1-2 hours before market close, also it was higher only. But then during the last 2 hours, the volatility index has fallen. So the same way, so in our markets also, if the markets, the GIFT Nifty indicating about 30-40 point gap up, but then we cannot say anything. That is, that is as per Friday night position. So we don't know what is going to happen Tuesday morning, but likely that India VIX is likely to go down, and then so markets will be in a winding up mode. So then any trend, the trend will be set in the month of January. So that we will discuss in the month of January. So hope you enjoyed listening to this audio. Thank you for listening. I think tomorrow I'll be able to come out with a video with a very important information. Thank you.